All right, welcome to Talk Tickers, the show where we get into the nitty-gritty of the earnings calls that are really shaking up the market. Today, we're talking about the grocery giant Albertsons. Now, on the surface, they dropped a pretty solid quarter, but the stock just got absolutely hammered. So what's going on here? We're going to dig in and find out.
And this right here is the big mystery we're trying to solve today. An earnings beat, a guidance trim, and a nearly 6% drop in the stock. You know, you see an earnings beat, you think, great, stock's going up. But nope, not this time. It tells you right away that the headline number, well, it's hiding something.
Okay, so here's how we're going to break this all down. First, we'll look at the numbers, which are frankly a bit of a mixed bag. Then we'll dive into management's huge bet on AI. After that, we'll cover the headwinds that are starting to pile up. We'll connect all the dots to figure out why the market freaked out, and then we'll wrap up with our own rating on the stock.
All right, let's get right into it. Part 1, the numbers. And really, mixed bag is the perfect way to describe it. Because when you look at the results, it's like a tale of two cities. The bottom line says one thing, but the top line, yeah, that's telling a totally different story.
So here's the scorecard, how they stacked up against what Wall Street was expecting. Adjusted EPS, 72 cents. That's a solid beat over the 68-cent consensus. Good start, right? But then you look at revenue. They brought in $19.12 billion, which was actually a little bit under what folks were looking for. Identical sales were okay, but that little miss on revenue, that's our first big red flag.
In this slide really lays it all out, the beat versus the miss. The beat is the profit number, the EPS. That's the good news. But the bad news? Oh boy. It wasn't just the tiny revenue miss. It was this, a 55 basis point drop in gross margin. And for a grocer, that is a huge deal. It means for every dollar of stuff they sell, they're keeping less of it. That screams rising costs or pricing pressure, and that's what really gets Wall Street spooked.
Now, it wasn't all bad. There was one monster of a bright spot. Digital sales were up 21% year over year. That's huge. It shows their online game is definitely working. But, and there's always a but, isn't there? That amazing growth comes at a cost, literally. All that delivery and handling for online orders, well, that's a big part of why those gross margins we just talked about are getting squeezed.
Okay, so you've got these mixed results, right? Margin pressure, a slight revenue miss. So if you're the CEO on that earnings call, what do? What's the big story you tell everyone to make them forget about the negatives and focus on the future? Well, for Albertsons, the answer is one thing, and one thing only, AI.
Yep, that's right. To fight back against all that negative news, management went all in on their big bet, turning this old-school grocer into a futuristic, tech-driven machine.
And look, you don't have to take my word for it. The CEO, Susan Morris, said it herself. Investments in technology and AI are fundamentally reshaping how we operate. I mean, that's about as direct as you can get. She's telling the market, hey, this isn't some little experiment we're running on the side. This is core to our entire strategy, from the warehouse all the way to your phone.
And they're not just throwing the term AI around. They actually broke it down into what they're calling their 4 big bets. Basically, they're using AI to make the app and website experience better for you, to get smarter about what products to stock and how to price them, to manage their employees' schedules more efficiently, and to fix their entire supply chain. You can see how each of those is supposed to either make more money or save more money.
And to prove this isn't all just fluff, they dropped this little nugget on the call. They said that customers who are using their new AI search tool inside the app, well, they're ending up with 10% more stuff in their carts. That's the money stat, right? That's management's way of saying, see, it's not just a cool idea, it's already working. It's making us more money today.
Okay, so the AI story sounds pretty good, right? But here's the thing. It doesn't matter how great your new engine is if you're sailing directly into a hurricane. And unfortunately for Albertsons, there are some pretty serious headwinds starting to mount.
And these are the big ones. First, we've already talked about the margin pressure from their digital and pharmacy business. Second, there's this new IRA Medicare rule about drug prices, which is a whole thing we'll get into. They also had a delay in some government SNAP funding. And then there's the elephant in the room, just brutal, relentless competition from Walmart, the club stores, you name it. Everyone's fighting for that same grocery dollar. So let's just quickly break down this IRA thing, because it's a little confusing but super important for their future numbers. Basically, the government is forcing drug prices down for Medicare. For Albertsons Pharmacy, this means the price tag on the drugs they sell goes down, so their total sales number looks lower. Here's the key though. It doesn't really change how much profit they make on those drugs, but Wall Street sees that lower sales number and it gets nervous. even if the profit is the same.
And if you want to see why investors are so antsy, just look at this chart. It puts everything into perspective. Management is busy telling this fantastic story about the future of AI, but investors are looking at their portfolios, and this is what they see. Over the last year, Albertsons stock is down more than 18%, while the S&P 500 is up over 17%. That is a massive gap. It just makes people way less willing to sit around and wait for a long-term story to work out.
All right, time to put all the pieces together. Let's answer that question we started with. Why on earth did the stock get crushed after an earnings beat? You can actually see the story unfold in real time if you look at the trading day. The earnings report comes out before the market opens, and the stock is down maybe 2%. Not great, but not a disaster. But then the earnings call starts. The analysts start asking the tough questions about margins, about the guidance, about all those headwinds. And the selling just picks up steam all day long, until it closes down almost 6%. It's a classic case of the more Wall Street heard, the more it wanted to sell.
So here's what it all boils down to. The market looked at that tiny revenue miss and, more importantly, that big drop in gross margins and saw problems happening right now. Then it heard the trimmed guidance and saw problems on the horizon. And when you weigh all of that, all those concrete, immediate negatives, against a cool AI story that might pay off someday, well, the market chose the here and now. It's the ultimate prove-it-to-me moment for Albertsons.
So, with all that in mind, what's our call on the stock from here? Where do we think this is all headed? Let's get into our rating.
Our rating on Albertsons is market perform. Look, there's a lot to like here. They are running the business pretty well, and that digital growth is no joke. But those headwinds we talked about, the competition, the policy stuff, they are just too strong. We think they're going to act like a lid on the stock price for a while.
So what does a market perform rating even mean for a trade? Well, here's one way to think about it. Step 1, you have to see the floor under the stock. With almost 50 million loyalty members and that killer digital growth, it's probably not going to collapse. But step 2, you also have to see the ceiling. The margin pressure and competition are going to make it tough for the stock to really soar. So you've got this range, right? This leads to step 3. A strategy like a covered call could be interesting here. It's a way to earn some income from the shares you own while you're basically in a holding pattern, waiting to see if that whole AI story really starts to deliver the goods.
And of course, we have to say it, this is not financial advice.